Hello everyone, welcome to our channel, and that is Double Click Academy, your ultimate online lesson. Today you realize basically we shall be looking at that is how to create and enter chart of account balances in QuickBooks. Now, what is a chart of account? A chart of account is basically the collection of accounts that you need to use during your transaction days in QuickBooks. And with that, that's what we shall be looking at today. And before we continue, please click and subscribe to our channel so that you'll be the first person to always receive those updates whenever we post them. And with that, allow me to take you through how to create the chart of account. Of course, you realize we basically have still our Double Click Academy company that we have been using for all the past videos, and that's the very account company we shall be using today as well for creating our chart of account balances in QuickBooks. So where do we find the chart of accounts in QuickBooks? The chart of accounts, we basically find it from the from home page here. We have here chart of accounts, but we shall also find chart of accounts from list. From you go to list, then from list we shall click on chart of accounts. We shall still find chart of accounts. From accountant we shall still find chart of accounts. All in all, it's the same chart of accounts we have. So whichever chart of accounts, whichever section we start with, we shall still be in chart of accounts. So we can decide to check any, maybe assuming we are taking the list, we are taking chart of accounts from list. We shall point at list, then it will give us all those items under list, but we are interested basically in chart of accounts. We shall click on chart of accounts, and there it opens chart of accounts. Sometimes it will open chart of accounts when it's a minimized form, and but still we shall maximize it and we shall be in position to start creating our chart of accounts. So basically we shall be using one of the examples in our what in one document here, and that is basically on this. Here we are told that the following are the elements of their chart of accounts with their opening balances as at 31st August 2021. Now, assuming that is the closing date, and this basically means these are closing balances in our chart of accounts. And that's basically what we shall be entering. We have things like under account name, we have things like share capital, which has a balance of 40 million. Then we have Stanbic Bank, cash book or stock cash in hand. We have computers, wages and salaries. Then we have long-term loans and then accrued water bills. That is basically our assignment of today. We shall be entering all of them into our chart of accounts, and we shall basically get back to our chart of accounts. Here we have already opened chart of accounts. Now, how do we create a chart of account, or how do we create an account and enter it into chart of accounts? We have already started by going to list, and then we clicked on chart of accounts. Now from there, after that, we shall come straight to down below here on our left. We shall see account. We shall click on account here. Then from that, we shall come to new. Because we are interested in creating a new account, we shall click on new. Then after clicking on new, we shall now look at which one is our first account. Our first account is share capital. Now you should be having some accounting knowledge to know that the share capital is basically under equity. That is under owner's equity, and we shall be posting this under account type called equity. So share capital of this, we have its account balance of 40 million. So it means we shall now go straight to create an account called share capital, of which we are saying share capital is part of equity. So we shall click on equity here, and that is the account type we are interested in for this. Then we shall click on continue. Now, after clicking on continue, we are basically taken to account name, and we are told the account name is share capital. That is the account name we are entering here, share capital. Then after that, we shall just click on save and close or save and new, depending on what basically we're interested in. And if we are taking the whole balances straight away, we shall just save and we shall just save and new, so that we shall be in position to create another account. That is basically it has the same account type. But you realize for this case, we would have saved and new, saved and closed, because we wanted basically to see how it has created it. Now here it has created share capital, and it shows that it's under equity and it has a balance of zero. So we can just, basically create all the accounts first. We now go straight to create the account also called the Stanbic Bank. Stanbic Bank is having a certain balance there as well. So we shall still go to the same area, that is account. Then we go to new. From new, we know Stanbic Bank is under bank. So that is where we shall be clicking, and then we continue. and then we name the account as Stanbic Bank. That is the account we are creating, Stanbic Bank. Then we shall save and close, and there you will now see Stanbic Bank account there also. Then we shall create another account that we have, that is basically a cash book. Now, when you look at cash book or cash in hand in QuickBooks, that one is also considered to be under bank. We shall not go to any other account, but we shall consider it as well as under bank. We shall click on that, because even when you look at it from here, the under bank we have things like petty cash, of which where our account belongs. Then we shall call it cash book. Cash book there, that is our account. Then we continue by going to save and close, and now these are our accounts now getting to be trickling into our chart of accounts. Then we have computers. We know a computer is a fixed asset, so we shall still go ahead by going to account, then new. From there we are selecting a fixed asset, that is a fixed asset being a computer. Then our account name is computer. We have computer there. We shall still save and close, and it there shows us that a computer account has been created. And then we go to the next being wages and salaries. Now under wages and salaries, we know that wages and salaries fall under expenses, so we shall click on expenses from here, and then we continue and call the account name to be wages and salaries. Wages and salaries, that is the account name. Then we save. Now there we have entered wages and salaries. Then now we come to long-term loan. Now long-term loan, we shall also go straight to this account, and we know that long-term loan belongs to either, we can call it a long-term liability. We can call it long-term liability since they are calling it a long-term loan, or possibly you can call it a loan. Whichever account you choose from here, still it will take you, it will be reflected in your balance sheet. Assuming we are taking it as this, we shall still take it, and then we call it a long-term loan, or we shall still go and take it as long-term liability. So we shall now take it as a long-term liability, and then we are calling it long-term loan. Long-term loan, there we save and close, and now there is our account called long-term loan. Then we go to the last account there, and that is accrued water bills. We know that accrued water bills is a liability, and we shall now come to it, and then we go and select that. We are selecting basically, that is other current liabilities, is where we shall put our accrued. Then we shall now go straight to naming it, and that is accrued we are calling it accrued water bills. Accrued water bills, that is the name, and then we save and close. Now you realize we have entered all the names of accounts that we were interested in, but there is one thing that we have not done, and that is basically we have not posted their balances. Now posting their balances, we know these are closing balances, and we have to complete these closing balances, then make a general journal entries with an account that we have been previously familiar with, and that is opening balance equity. Now we shall now go back our home page, and then we go and look for where we can find make general journal entries, of which we know make general journal entries, we can find it from accountant, and here it is a make general journal entries, just like the accounts when we are creating the vendors and customers. So we shall now go straight to that, and from here is basically where we shall now post the balances, and we know that our first account here has a balance of 40 million. Now, we are saying this is an equity, and we know that an equity has a credit balance. Now, it means this one will be posted in the credit side of our make general journal entries, and then we shall balance it off with the other make general, the other account that we are calling opening balance equity. So we shall now start click on the account, of course, after setting our date, and our date we are talking basically the the closing date here is 31st, so we can decide to use the our first date of the year, and that is the 1st November, and then the year is the 2021. 2021, we are calling it 1st November because the ending date was that 31st August. 31st August 2021. Then we now come and look for our account. Our first account we are saying is share capital. Now, if you're not seeing share capital, we can still type share there and share capital will be visible there. Then we are saying a share capital as a credit balance of 40 million. So we are typing there. Under credit side, we are typing 40 million. And then we shall now come and balance it off with what we are calling a opening balance equity, which is this account here. So you realize that account is already complete, and then we can save and new because we know that we already have other accounts as well for this to be posted. Then we now go to the next, and the next is basically Stanbic Bank, and Stanbic Bank has debit balance. Stanbic Bank has a debit balance of 20 million. Of course, you know that a bank has a normal balance which is debited. So here we have basically 20 million, and then we shall complete it with opening balance equity with that. So you realize basically we shall still save a new, and then we go to our next transaction, and that is cash book, which we treated still as under a bank. So our cash book account also still has a debit balance. Now here we have a debit balance of 5 million is what we have for that account, and of course we shall complete the double entry still with opening balance equity, and then we shall save a new so that we shall be in position to post the next transaction, and that is computers. Now computers has a 6 million balance. We know computers are fixed assets, and fixed assets basically have also a debit balance, and we shall post there 6 million under our debit side and complete it with opening balance equity so that that account will be balanced off. And then the next transaction here we have is wages and salaries. We know that wages and salaries are expenses, and we know that expenses has a debit balance. Now we shall post the amount of wages and salaries being 2.5 here under our debit side, 2.5, and then we shall complete that transaction with the opening balance equity. We are completing it with opening balance equity. We are saving a new, and basically that is that. Then now our next is basically long-term loans, and we know a loan is a liability, and we are basically having it as the loan now being a liability. We are basically going to post it also under our transaction. I mean under our in our make general journal entry. So we are basically on the loan, and we are saying loan, long-term loan, basically has a credit balance because it's us, the company that is getting it. Assuming it was the company that was giving out the loan, it would be the debited. But for this case, we are crediting the loan balance that is of 6 million into our make general journal entries, and then we are completing it with the, of course, our usual account that is opening balance equity. Now with that, you shall now save a new just like we have been doing for the rest, and then from here as we know that our crude water bills are basically liabilities. So in our QuickBooks, we shall still consider it also as a liability, and then we shall credit this amount, that is the amount of 500,000. We shall credit that amount of 500,000, and then we balance it off with basically our usual opening balance equity. So since that is the last transaction here, it remains basically we shall be saving and closing it into our QuickBooks, and there we are. Basically, we shall now go and look at it from our chart of accounts. You realize all our postings have been recorded here. We now see our cash book balance being recorded. We have our bank being recorded. Datas, we had entered datas before, and then we have our computer there being recorded. We have our accrued water bills being recorded. So long term still shows long term liability. All of them are showing the account types with their balances here. And you realize with that, we have basically done what we are supposed to do basing on our question. So with that, we come to the end of our chart of accounts recording. And thank you so much for tuning in. and be blessed this night.